Hi, Tamal. Welcome to the banking show. We've just had the RBI monetary policy come and we've seen that the rate has remained unchanged. Can you take us through the broad features of the policy and the macroeconomic implications of the same?
Thanks, Ruchika. Yes, the policy is on the expected line. There is no change in rate. But where the market was divided in terms of expectation was about the stance. Would RBI change the stance? Now here also there is absolutely no change, which means the stance continues to remain withdrawal of accommodation. But what RBI governor has explained is this: don't equate this with a tight liquidity situation. He has categorically said that RBI will use all the instruments at its arsenal to manage the liquidity very nimbly. And he also used the word durable liquidity. So what at this point of time, what we have been seeing is there has been certain friction. Certain days liquidity is not there in the system, and it was pretty high quite some time back. It's for what quote unquote for exogenous factors. I think one of them, which he has not said, is the government is sitting on too much of cash, not using it, and things will even out. And at the same time, Reserve Bank of India is happy to use all the instruments to smoothen the liquidity, so banks do not have any issue with this. So stance remains the same, and interest rate also, the policy rate also, there is no change. He has reconfirmed his vow to fight the inflation to the logical end. So we have reached the last mile, but it's a very critical segment. He will not give up. So which means we need to wait for a rate cut. We'll talk about that later. The two more important thing is this. One is the inflation projection. Now, inflation projections for the year has not changed current year. It continues to remain 5.4%. He has brought down the inflation projection for the last quarter of this current year, which has to be, because to be in sync with 5.4%. When it comes to next year, inflation is pretty optimistic, 4.5%. That's what is going to happen. And the other part is this, of course, the growth 7.3 for the current year and 7% for the next year.
Tamal, the growth projection of 7% for next year for 525 is higher than what most agencies, rating agencies, IMF, etc., have projected. Where's this confidence coming from? And do you think we are being more optimistic?
Well, I wish I knew the answer. Let's not talk about the rating agencies. The government, finance minister, and the bureaucrats in finance ministry, they have been saying less than 7% growth, right? If you see that interim budget has spoken about nominal GDP growth, say 10.5%. Now, if your nominal GDP growth 10.5% and the real GDP are expecting 7%, then the inflation needs to be at 3.5%. That cannot be the case, because inflation is 4.5%. So which means nominal GDP growth, if RBI estimate of inflation is correct, 4.5% for next year. So the nominal GDP growth has to be 11.5% to have a 7% growth. So if you see, traditionally Reserve Bank of India in general and the current governor, Mr. Das, has been pretty conservative. But on what basis he is saying this kind of growth, I wish I knew this, but he seems to be very confident, and it's very confident that inflation is on a trajectory of going down and growth is on a trajectory of coming up. So it's a wonderful situation.
So inflation is on a trajectory to come down, and he has reaffirmed his commitment towards bringing inflation down. When do we see a rate cut?
Well, if you see the underlying theme of the policy, I think we need to wait for the rate cut, because at this point of time, he has repeatedly reaffirming his fight against inflation. Did you notice that he had his first sip of water after half an hour, explaining everything? So he is not giving up his fight against inflation. He wants to bottle inflation, Gini. So we need to wait. Now, will that happen in June? Certainly not. Will that happen in September? Probably not even that. It has to be preceded by a change in stance. And also, of course, apart from the domestic factor, what's happening in US and UK, other thing we need to see. Now, if US Federal Reserve goes for a March rate cut, which is unlikely, next at the next meeting, which is very unlikely, then it will be India will be in a little bit not as long as we have been expecting. But in all, I would not expect a rate cut in the first half of next fiscal year, which is till September.
So there is the MPC, which is on expected lines. And as Tamal has underlined again and again, that the commitment towards inflation continues. Even FM yesterday in the parliament said that inflation is now within the tolerance level, the tolerance span of 2 to 6%. So, of course, eyes will be there on future rate cut as well, as you have pointed out. Thank you so much, Tamal, for joining us today and sharing your insights.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.